So this is where we last left off is, well, what do we do when we have pending checks that are ready to be printed? Okay, so now let's talk about printing checks. All right, so here in QuickBooks, there's two ways that you can print a check. All right, well, three if you count the one after a bill payment, right? You get that notification saying, hey, you want to print your checks out. But in this case, we need to figure out what settings that we need to have in order to successfully print out a check. Well, first, here you go on your home page, you got print checks right here. Okay? And of course, on your file menu, you have print forms here, right? So again, like any standard program, you do file print. Same thing here, except it's print forms. And then you have to be specific on what form you're printing. So as you can see, there's a huge list of what you want to print. I want to print checks. Okay? So when I click on that, what you're going to see is there are 3 pending checks that are ready to be printed. Okay? And we need to make sure that are these the ones that we want. You can pick and choose like we've mentioned before, but in this case, I'm going to go ahead and process all 3 checks. Right? We're making sure it comes from our checking account, right? And it tells you your account balance here to make sure that you do have enough to pay for all 3 checks, okay? In the amount of $3,000, okay? And then here is where I can assign the check number. So here it automatically creates a series of numbers, which is starting with 6001. That's perfectly fine. If I want to start my checkbook from Intuit with printing check number 6001, that means I have to be consistent in going through with that number, okay? So in this case, 6001 is good. So now I'm going to go ahead and click OK. So I have 3 pending checks, okay? So now it's going to take me to this window, and this is the window where you're going to need to set up not only your printer, but the necessary things that you need to have in order for you to print on it. So again, if you're just figuring out how your printer works, right? If you're using the auto paper feed or the back paper feed, right? You need to make sure when you print your checks, you don't accidentally print them on the wrong side of the check, or you don't want to accidentally print them on a blank piece of paper. You want to make sure that you know how your printer works. Now in this case, yes, you can use any standard printer. It is completely fine, but there are some rules and regulations that you have to have, such as a specific type of ink, and you definitely need to go to the bank to purchase treasury paper. You cannot just print it on a piece of paper. If you could, the whole world would be creating fake checks left and right, right? In this case, it has to be on legitimate treasury paper, okay? And the bank should have it, as well as Intuit can provide it for you as well, right? And these treasury papers come in 3 different styles or forms, okay? First one is going to be voucher style. Voucher style is good for things like printing out, for example, paychecks, right? Because in this case, voucher style is going to give you details in regards to what this check is about at the very top of the page, and then down below is going to be a terrible, like you can rip the check down at below to get your check and submit it, right? This is a standard one for typical uses of paychecks. Your second one is going to be called standard, where staggered, where you have 3 checks that are on a regular piece of paper and it's lined up. So you have the top is the first check, the second is the second one in the middle, and then you have the third one at the bottom. So again, 3 checks together in one page, and they're all, they have perforated lines so you can, separate the checks. Okay. And then they have wallet style. Wallet style is more for the ones that that you normally get, where it is shrunken down to look like the size of a regular check, which is about the size of a regular dollar bill, right? Not a full 8 by 11.5 page, okay? And this one is going to be like a small piece of paper and it's wallet size. And that one you can still, it's also three checks at the same time. So again, these are the three options that you can go to your local bank for. You can even have the bank print it for you to help you save you some time and stuff like that. But if you are working at home or your business is at home, then you make sure that you do invest in a high quality printer that accepts the ink that can print out on checks. So you can't be using water ink, okay? It has to be, I believe it's laser ink, okay? And you have to have the treasury stock paper for you to be able to print on those pages. So again, the treasury stock paper has that little black, like gray, black and white dots on them. On the front should be like a nice like holographic seal or type of paper on it. That's going to be an official treasury stock type of paper. And yes, you can obtain it. All right. So again, what do you want on there? So if you choose voucher style, you can have all the information that you want to have on here because you are printing on a piece of paper. But I want staggered, okay? So I can print all three checks into one page and I'll be okay with that. Now, because with this, right, the way that you're formatting it, again, it's standard based on, obviously, what a regular check looks like. It's going to have your company name. If you want to put a company logo, you can because I believe Intuit or the Treasury standard paper allows you to, it's blank, and it allows you to print on it. But of course, it's like that special paper. And for most cases, right, a lot of times when the business owner, right, they can come into the office as they please and go, right? They don't need to be there all the time to sign checks. So normally what happens is you are going to get authorization from your boss to go over them and make sure that the boss approves of it. And they said, go ahead and stamp my signature on there. So what you can do is you can even include a signature, okay? Now in this case, you're going to see this little box here. If you have that little pad where you can actually do virtual signatures on, this is where you can do it. You cannot use a regular mouse and just be able to sign it. No, you need that legitimate signing pad to be able to do this, okay? But if you don't have it, that's okay. You can even upload an image, and that's what I'm going to be doing. I'm going to go ahead and choose a file. Now, again, in your Intuit or in your student portable files, you do have a copy of a signature, okay? And for practice purposes only, if you want to, you can link up your actual printer to just go ahead and print an example, okay? But you're not obligated to do so, all right? It is optional. I don't want you to have to waste ink and paper for no reason. So in this case, you don't need to do it. But when I go to my student portable files, here you go. I have a signature. It's going to give me this message. I click OK, and that's what it looks like. So the owner of this company is Vern Black. Okay? And I click OK, and I go ahead and click OK. Now that this is only in the case of if you want to print them. In this case, I have a digital printer, so I don't necessarily need to waste any paper here. But I am going to put this in the same location as the student portable files. So I'm going to relocate that folder so I can put everything in one folder. Okay, so QuickBooks portable files for this class right here. And I'm going to name this bill payment checks. Right? And save it. So then I have a digital printer, so that's what it's doing for me. It just digitally printed an image of the checks. I don't have to waste ink or anything like that. So then here it says, all right, these bills have been paid or they have been printed, and I click OK. All right. Now let's take a look at this. Well, if I paid my bills, right, let's take a look at my check register. Here it tells me I paid bills number, well, the first one was just a regular check, right, to my landlord. right? I wrote it on check number 6001. The next one was 6002, was a bill payment to A Supply, and 6003 was another bill payment to Wong and Son. Okay, so it made it specific because I used bill payment to pay for these bills that I had. Okay. So then let's go ahead and check out that accounts payable account like I mentioned before, right? If I go to my accounts payable, what's going to happen behind the scenes is now my account's down to 0. Because if I double click on my accounts payable, because I use the bill payment, that in behind the scenes, it credited my liabilities, which decreased the amount that I owe. And here we go. Now it tells me that I paid my bills and that I owe $0 now. And I click OK. All right, so that's that there. So again, bill payment increases accounts payable. Bills increase accounts payable, bill payments decrease accounts payable, right? And it's all connected. So by just adding that one transaction, look how many transactions it actually was connected to, right? Any questions in regards to printing checks?
No.
Okay. All right. So, for any reason, you have to void a check for any reason. Maybe you wrote the wrong amount, you didn't mean to send it, you didn't mean to print it, whatever means that you did not do, right? Or maybe you forgot to add a discount. Now, rule of thumb here is you should void a check before sending it out, because then you can write a new check and be able to reissue it out to the vendor. But in this case, if you already sent it out, and let's say the other person did not receive it, right? Your vendor did not receive it, and they contact you saying, "Hey, I never received my check that you owe me." Well, in this case, you said, "Yes, I did. I have proof of it right here. It's check number 6003. They said, "I never received it." So the rule of thumb here is, what do you do? Well, the best thing that you can do is to void the check and reissue a new one. Okay? And that's what you can do here as well. Okay? Now, here is the difference between voiding and deleting a check. Voiding a check will just zero out the transaction. Deleting the check will pretend like it never existed. And that can cause a lot of holes and discrepancies in your transaction, especially if it's linked to other transactions. So if I were to just delete this transaction, my bill would cease to exist. Okay? And that will cause holes in my reports and everything, because I should have owed Wong and Son money, right? But I chose that I just end up deleting it. Rule of thumb here is also for accounting as well. Never, ever, ever delete any transactions, because if you are not the accountant, or if you do not know how debits and credits work, you will mess up your books and it will cause more problems in the future, right? You won't be able to fix it. So because of that reason being, right, and you don't want your accountant to have to fix it, because again, one deletion can cause a chain reaction and cause a lot of holes in the bookkeeping process in general, right? Because not one transaction is linked to multiple accounts, and you don't want to just do that, okay? So the best rule of thumb is to avoid trying to delete all transactions, and the best thing to do it is, if you made a mistake, just void the transaction and redo it, because that just undoes the transaction, right? Void is to undo or to zero it out, and everything will be back to normal, and you just reissue it. Okay, so how do I void this check? So what if Wong and Son said I never received my check? How do I void it? Well, there are a couple ways that you could do it, right? You could go to the edit right here menu at the top, and you can choose to void the check, okay? Or void the bill payment, whatever it's called, right? Void the check, okay? Or you can just simply right click on it and you'd be able to void it as well, okay? Now, you can even double click on it and you can choose to void it up here as well if you go up to the top of here. And you can void the check here. But rule of thumb here is the best and easiest, quickest way for you to actually see it is to go ahead and just void it right there in the register. Okay, so again, I can choose to right click and that's what I'm going to do. I'm going to go ahead and right click and I'm going to void this bill payment check. Okay. Then now it says void here, right? I haven't entered in to verify this. Now notice this, it's going to zero out this account. And when I press enter, you're going to get this message saying, hey, because you're voiding a transaction, make sure that this is something that you are for surely going to do. Because if you make a mistake, again, it's going to warn you what can cause and what can happen. And in this case, I'm just going to go ahead and say, let's see, QuickBooks lets you do this, but you need to be careful, okay? So again, the question is, okay, actions that you can do. Okay, so the question, okay, I'm just gonna say yes. So there you go, boom. I saved my voided transaction and it even appears right here saying it's voided. If I were to go ahead and click on that check, it will tell me that it is voided. Okay, right here. Okay. And that means my bill payment has been undone. Now, how do I check to make sure of that? Well, if I go to my vendor center, right, I can check out Wong and Son, and it's going to tell me I still owe them $142. Okay, I can even go to my chart of accounts and check out that accounts payable account. So accounts payable has now went back and reverted back to $142. So everything, basically a voided transaction, what it does is it undoes it, whichever way, right? So it just reverts it backwards, okay? And then now that you've done that, you're going to reissue a new check, okay? And make sure when you reissue a new check, because this is a voided number, right? You can never use the same check number again. You would actually have to make sure that because this check is number 6003, the new check that you issue is going to be 6004. And at least you have this note right here saying that you voided this transaction. So then when you do run your reports, you don't have a missing number between 6001, 6002, then 6004. It shows you right here 6003 and it's voided. Okay? Any questions there?
No.
I'm good.
Okay. So then the next section, you can, I'm going to skip over this one. It's the petty cash one. Petty cash is going to be subjected to the type of business that you are. If you need to have one, then have one. What is a petty cash drawer? A petty cash drawer is more or less a little small lock box that you save for minor expenses that just happen randomly while you're doing your business, right? What if you run out of money in your in your cash register? That's what the petty cash for, right? It's emergency money. What if the post delivery guy decides to come up and say, hey, I have your items, but you have to pay me, and you don't have the checkbook on you? That's what the petty cash drawer is for. I need to go run and get some bagels for the meeting. That's what the petty cash drawer is for, okay? It's for minor business expenses. Now, does every business need a petty cash drawer? No, it is optional, okay? It is a little safeguard, I would say, for in case you have to do emergency transactions and your boss isn't available in the office, right? Then that's what this is for. Oftentimes, this petty cash drawer could be used as a business credit card. I know that can come into play. That instead of having a actual physical cash box available, right? Because anybody can steal it. Then a credit card is readily, easily available. Okay, So again, it just really depends on your core of operations. It is meant for just minor transactions. So if you need a petty cash drawer, go ahead and read this section here. But if you don't, then it's not really relevant for you. Okay. All right. So then the next section I have here is going to be looking at vendor credits, or actually, sorry, using credit cards. So of course, right, with technology today, right, and the widely use of credit cards, it is the most easiest form of ways that you can make payments for anything, right? Especially how easily accessible it is. You don't have to have cash in your wallet. You don't have to have a checkbook in your wallet, right? Who carries a checkbook right nowadays, right? It's hardly being used for anything. But again, for businesses, it is the perfect form of way to keep, have a paper trail in regards to keeping track of your expenses and your income, right? A check is a good way. But that you could also do the same thing by you going digital and using a credit card, right? Because if you swipe your credit card at any store, right, you go into your online banking, you check out your credit card statement, and boom, it should be right at the top, right there, when you do your transaction at the store. So credit cards are going to be the more, nowadays easier form of way that we can just pay off things. And of course, when we have a credit card, right, a credit card is a liability. Because in this case, a credit card is a means of us borrowing money from an actual bank institute, right? So in this case, right, a credit card allows us to get us a few cash advance, and then what we do is we owe that bank some money, right? But it also comes with the price. It comes with the price of being charged interest for the readily, easily available cash in a form of a card, right? So we all know what credit cards do, and we all know what credit cards are used for, right? So here, how do we use it for a business transaction? Pretty straightforward, okay? On your home page, you have it right here. Enter in credit card charges, right? It's underneath the banking because, again, if you're going to have a business, you're probably going to have, for sure, a debit card, and then you're going to also have some form of credit card, okay? And it has to be the legitimate bank's credit card. It can't be your personal, okay? And of course, if you go up to banking, you also have the enter credit card charges as well, okay? Those are the two ways that you can enter in a credit card transaction. So let's take a look at our first one. So here I go ahead and click on credit card charges. Now this is where you have to make note. Right here says, am I making a purchase or am I getting a refund back to my credit card? So for any reason, and we'll talk about this in a couple more minutes here. If for any reason you return something and they say, okay, the money's going to go back to your credit card, this is where you have to go ahead and switch and toggle between them. And we'll talk about that because that's the whole idea, right? If you're going to make a purchase, you have to also assume that you can return the product. Okay, so in this case, my way of returning, or in this case, I'm making a purchase using a credit card. So that's what I'm going to be doing here. Now, in this case, right, it's going to allow you to choose your credit card that you want to use. In this case, this company only has one credit card, okay? And that is going to be this National Bank Visa Gold credit card, okay? Any business can have as many credit cards as you like, okay? As long as it's under the business name, okay? Any credit card, all right? So in this case, it's already selected as National Bank Visa credit card, okay? Now let's go ahead and enter in our transaction here. We are going to be doing a transaction for, once again, Bay Office Supplies for the 24th of February. And let's see, so we're doing Bay office supplies. So again, we just had them in here, Bay office supplies. Okay, and of course, we're going to be taking a look at the date to be the 24th. So 24th, okay? Reference number. Okay, so again, this could be the receipt number. This could be the invoice number, the bill that you received, that invoice number, and you use a credit card to pay for it. Or it could be your actual credit card transaction number. Okay, where do you get that credit card transaction number? Again, you do online banking or access the website, and you can find the actual legitimate transaction number for this card transaction. Okay. So in this case, they actually gave it to us here. Let's see. Enter. Okay, so this transaction number, reference number is number 65432. Okay. And again, what is the amount for? You can either type it in there or you can choose to enter it down below. Now in this case, it's going to be entered in for the total amount of $86.48. Okay? And what did we buy? We decided to buy printer ink. Okay? So memo, printer ink for San Jose. Okay? So again, what account number is this going to be affecting? In this case, when we're using a credit card transaction, it's not going to recognize it because a credit card transaction can deal with infinite amount of transactions necessary, right? Because you're using a credit card to pay for anything and everything. But when it comes to receiving a bill, right, it's usually selective, right? It's usually saying, well, if you're getting a bill from this person, then it's obvious that you're going to be utilizing this expense. So in this case, a credit card transaction, again, can have infinite amount of transactions. So in this case, I am purchasing office supplies. Okay. Office supplies for $86. And once again, if you want to, I'm going to copy and paste this here into my memo. And then, of course, I also going to identify my class is that I bought this for the San Jose location. All right. Now that everything looks good, I have a credit card payment, credit card charge here. I'm going to go ahead and click Save and Close. So now that I have that, here's the next question. Where do you think I can locate my credit card transactions? Where do you think I can locate my credit card transactions?
Would it be accounts payable?
It is not an accounts payable because it's a separate credit card. Right? You're not owing just any vendor. You're owing a bank, an actual bank. So in this case, it's creating a separate account for it. Where do you think I could be able to locate my credit card charges?
Would it be under liability?
It is under a liability. But what do you mean by under a liability? Where can I be able to locate this on using QuickBooks? Okay. So let's take a look at my home page. Is there anywhere that I can be able to look at my credit card transaction on my home page? Not really, because my only option is to enter in the transaction. I don't get to see my transaction. If I go up to my banking menu, am I able to locate where I can enter in my credit card transaction? It doesn't seem like I can. I can only enter in a credit card transaction. So you are very, very close. You said liability. Where can I find my liabilities? In my chart of accounts. So if I go to my chart of accounts, right, as we remember, if it's a liability, it must have a register. So in this case, I'm going to go to liabilities and I'm going to locate my National Bank Visa Gold credit card. And look at that, okay? So this is categorized as a credit card, which is a liability, right, because you don't owe anybody else except for the banking company that you are currently getting this credit card from. So in this case, I have a total balance of $86.48. If I double click on it, boom, there is my transaction here. So here it says that I owed $2,152 and I made a payment. Okay? And it says right here, I used a check. All right? And yes, you in this case, if you're trying to make a credit card payment, yes, you can use a check. Right? And here you go. I have it for $86.48 that I just entered in here. Okay? So that's how I'm able to locate my transaction. So if I need to fix something on there, that's how I'd be able to locate it. I'd be like, okay, I made a mistake. So I'm going to go ahead and click on it and be able to edit the information on here. Okay? So let's see what is next. So now that I figured out how much I did there, let's go ahead and do another example here where we're going to be entering another credit card transaction, okay? This time it's for Rodriguez Rentals, okay? For the 25th of February, okay? What can this Rodriguez Rentals do for me if I enter this in as a credit card transaction? Well, let's take a look, okay? So again, Rodriguez Rentals, okay? So in this case, I'm going to be renting equipment from them. So, and it's going to be on the 25th. Okay? In billing information, in this case, I don't think there is one. Okay? So, what I'm going to do here is I am going to enter in Rodriguez for the 25th. Reference number, okay, there is one. Reference number is 987153. Okay? And it's for $35.40. Okay? And again, it's for rental video equipment. Okay? And it's for Walnut Creek. So again, here's another equipment rental. Okay? And it's for the Walnut Creek location. Okay? Again, if you want to fill in information, you can go video equipment rental. Okay, for Walnut Creek. Okay, there you go. That's what you can do when it comes to making a credit card transaction. Now, here's the next question is going to be, how in the world do I pay my credit card? So let's go ahead and just validate this transaction. Okay? How in the world do I pay my credit card? Well, you have a couple ways that you can do it. All right. You can choose two options. Is one, enter in a bill, right, and choose whether you're going to pay off the entire credit card or pay a portion of the credit card, right? Because when you get credit card statements, right, it doesn't require you to pay off the entire balance. It only requires you to pay a minimum payment, right? But don't forget, you have to include the interest that you could be possibly charged. Okay? And we'll talk actually more about this in chapter 5 when we talk about reconciliations and what means it is to go ahead and pay off a credit card. But in this case, right, I can continue doing my transactions as usual by going ahead and entering it in using the enter credit card transactions. Okay? But like again, I'll show you how to make a payment to this credit card, right? You can choose to use or write a check and just write the check right away. So in this case, if I owe the credit card right now $121.88, I can go ahead and do this. I can say if I want to make a payment to my credit card right now by using a check, right? And let's say I want to make an online payment. So instead of doing print later, I can choose EFT, right? Electronic funds transfer, which allows me to go ahead and put in that information. And it's going to be 121, typo. Okay, 121.88 cents. And what I'm going to do here is, who is it to? Well, in this case, it's going to be to National Bank, the National Bank, right? That's the person that I am making a payment to. That's the bank, right? And what I'm going to do here is I'm going to pay this check directly to my National Bank Visa credit card. Okay? So that's one way that if you're going to pay for it right now, that's how I can do it, right? And I'm using an online payment because I'm not going to go write a check to this company. I'm going to go ahead and pay them online. So that's what it can do here. And of course, it doesn't affect either or class because it's a credit card payment, right? I'm paying in general for this credit card. So I can go ahead and click Save and Close. Now it says again, one or more items have not been assigned. Okay, so no class. And we can go ahead and save anyways because again, a credit card payment doesn't affect my San Jose or my Walnut Creek location, right? It does it for both. And you don't necessarily need to assign it. So if I go ahead and make a payment that way, right? If I go to my National Bank Visa credit card, National Bank Visa credit card, now it tells me my account balance is 0 because I paid using a check, okay? Again, this is not the only way that I paid using an electronic funds transfer. This is not the only way that you can make a payment to the credit card. And once again, I'll show you in chapter 5, okay? But that is, if you want to pay for it now, you can just go ahead and use the write a checks function and pay directly to that credit card. Okay. So now that we talked about credit cards, let's talk about the next section here, which is going to be vendor credits. So for any reason that you get special offers, discounts, or you simply just want to refund a product, then that's where vendor credits are going to come into play. Okay? So, again, for any reason that you have a means to have to return a product because of just the way it came out or when you purchased it and it was broken due to shipment, you can request a vendor credit at any given time. Okay? So, a vendor credit, what happens here? When you contact the vendor and you request this refund or this credit, right? You're going to be receiving the refund either through your letter, whether they readjust your bill payment, or they're going to adjust by giving you a credit. Now, in this case, let's go ahead and do this example here where we are going to be putting in Nellis Distributing, okay? I'm going to enter in the bill first for the $300, and then I'm going to go ahead and give a bill credit for $25, okay? So let's go ahead and do that first. So let's go ahead and enter in a bill saying that we got a bill from Nellis, okay? Nellis Distributing, okay? And we purchased from Nellis Distributing on on the 17th of February, okay? And we purchased it, so this is reference number is going to be 5088 for $300. Okay? $300, and it's going to be a custom frame, which is going to be a cost of goods sold. So in this case, I'm going to have this for custom framing. Okay. And of course, everything is set there. Now, is there a particular person that we bought this for? In this case, we bought this for Bob Mason, which is someone that is going to be from San Jose. So Bob Mason, okay, and he's from San Jose. Oh. Cancel. B-O-B. And he is from San Jose. Okay. Let's say we bought some custom framing for Bob Mason. They charged us $300. Okay. And I'm going to go ahead and save and close. Okay. Then, because we have such a good connection with Nellis Distributing, they decided to credit us $25. Okay, they decided to give us a discount. Okay, for $25. Now, in this case, how do I enter in a credit? Okay, any way that you are able to enter in a bill, right? At the top of the window, you have bill, or you can add in a credit. Now, please, in QuickBooks, do not refer this as a credit memo, okay? In QuickBooks, this is called a vendor credit. A credit memo is when you give credit to a customer, all right? Now, in, of course, business world, if you go out in the real world, credit memos could be used for vice versa, vendor or customer. But in this case, when we're looking at QuickBooks specifically, you need to know there's a difference between a vendor credit and a credit memo, okay? In this case, I received it from Nellis, okay? So now that I have a credit, it's going to be the same day, but this time, because it's a credit, you're always going to use the reference number, and you're going to add a letter C, so then you know that this belongs to this particular bill, okay? So in this case, the bill was $50.88, and we're going to add a letter C to make sure that we know that this is connected to the bill that we just received, right? This is a credit, and it's going to be applied to that bill, okay? And this credit for is going to be a $25, okay? And what we're going to do here is that we're going to make this 588 credit, right? To be, let's see, to be a purchase discount, okay? So right now it's cost of goods sold. We're going to put this as a purchase discount. There you go, purchase discount. Okay. So now that we have that there, again, it doesn't really affect anybody because it's not like we're going to be putting it on Bob Mason or anything like that. But you can say, well, at least this is for the San Jose location. Okay. And once you add that in here, I'm going to go ahead and click Save and Close. Okay. Now, since that is what I've entered in here, so if I go ahead and look up that information, right? This is from Nellis. So Nellis Distributing. It tells me that I have a bill and I have a credit. Now, how do I apply that credit to my bill? Straightforward. Now, this is only if you are going to be upon paying the actual bill. So again, if you do collect this credit, you have to be responsible to be able to recognize that you have a credit. Because if you don't, you're gonna end up paying for the whole thing, and it's not going to pan out for you. So in this case, right here, I want to do the Nellis one, and this is where you have to come down below here and saying, well, it lets you know that you at least have one credit, okay, and you have that it's available for $25, but you haven't applied it yet. So that's where you actually have to go down here, and you're gonna have to set that credit. So when you set this credit, same thing as what we did prior to this, right? You're going to select this one, except, okay, so this one, you're going to select the credits that you want to apply, and you're going to click done. And what's going to happen is, boom, it applied the credit, and now you only need to pay $275, okay? And you could choose whenever you want to pay, check, to be printed, checking, and so on and so forth, okay? So that's how you apply vendor credits, okay? Any questions here?
No.
Okay? So again, when you purchase an item and you realize that you need to go ahead and refund that item, you contact that vendor. The vendor shall give you a either new bill, or they give you a credit, right? They'll send you a notification of what happened. And what your responsibility to do is you are going to manually enter in that credit. And then when upon paying, you need to remember that there was a credit to begin with and apply it to the invoice. Okay, or bill in this case, right? The invoice is to you. Yes.
Would there be another way to remember that QuickBooks can show you have a credit available from this vendor?
And that would be down here. So if you remember, I didn't do anything. It just says that you have one credit available for $25.
Yeah, I mean, if you forgot and you did not look into pay bills yet, will there be any other way?
No.
No, okay.
No. Unfortunately, no. You can set a reminder when you do pay. Like, you can make a memo to yourself. But at the end of the day, no. This is the only way it will show you that you have a credit. But again, you have to be responsible. You have to actually look at the bill, and then you have to be very, very detailed in looking at the details in regards to this transaction. Because that's your responsibility as an accounts payable. You need to be very responsible for managing your bills, and you can't rely on technology to do it for you. Okay. So once I have that, I'm going to go ahead and click process checks. Okay. And I'm going to click done. All right, so that's the same thing. So if you get a refund as well, you would have to be able to do that as well. Okay, so again, we're going to make a credit from a vendor. Okay, make a deposit, and then so on and so forth. Okay, so that's how we use vendor credits. So here's one more section in this section of dealing with credits and things like that, is doing a vendor deposit, okay? In this case, when you do business with some vendors out there, right? Especially if you are a first-time user, okay? Vendors will require some kind of deposit, some kind of down payment to ensure that you are going to be committed to whatever you asked of them. And we call these vendor deposits, right? Where if you are trying to buy something, they tell you, well, we need you to give me a down payment, so then if you do end up backing out last minute, we don't take a huge loss for it, right? We at least got 50% of the money, even though you backed out on it. Okay, so this is going to be a vendor deposit that is a safeguard for other companies that want to give services, but they don't trust their customers. And in this world right now, that's the assumption, right? If you want service, right, you got to pay me 50% now, so then I can save your spot. And then when you do call me on the very last day and tell me, sorry, I don't need your services, we don't have to pocket out for that service. Okay, so in this case, it is a very typical technique that is typical in many businesses, that they're not going to trust their customers. So in this case, because we're the buyer, they're not going to trust us to want to pay this. Or for example, especially for like a rental equipment kind of operations, maybe that deposit is to reserve those equipments for you to have that day. So that's exactly what we're going to do this time. But when we're going to be creating this, we're going to be writing a check. And when we write this check, we are going to make it to accounts payable. Okay, so let's take a look here. Okay, we're going to be looking at our vendor, and we're going to look at Rodriguez Rentals once again, because they're going to require a rental deposit. Okay, so what I'm going to do here is I'm going to go ahead and write a check. Okay, and I'm going to write it out to, once again, Rodriguez. Okay, and I'm going to make this for an accounts payable. Okay, because the thing I need to know here is that I am that this deposit is going to go towards my accounts payable, right? Because I'm going to be receiving a bill from Rodriguez Rentals, right? I'm expecting a bill from them. Okay, when, it doesn't matter. I'm going to put print later when it time is relevant. So in this case, I'm just going to go ahead and we have equipment rental. I'm going to change this because in this case, this is a vendor deposit, right? They require me to put a deposit. So in this case, I'm going to use accounts payable. Okay, and for the amount that I'm going to be putting this down payment for is going to be for a total of $200. Okay, $200 for the Walnut Creek location. Okay, and I'm going to go ahead and make a note that this is vendor deposit, or I could say rental equipment deposit. Okay. So I have it for $200. Okay, and it's going to go against my accounts payable. All right. And of course, because of this, I need to also say that this is going to be a customer/job, because I need to make a reference point that this is going to be going towards a bill. Okay. So once we have that and we make our account to accounts payable, right? And it's going to be for $200. Walnut Creek is my last thing I need to put in here. Walnut Creek. Okay, so now that everything looks good, the date is actually going to be on the 22nd. Like I said, time is relevant or relative. So in this case, once I've done this, right, I can go ahead and save it. Okay. So that is me making a deposit. Okay. So then now I need to enter in the bill. I need to enter in the bill from Rodriguez Rentals, okay, for the equipment rental. So Rodriguez Rentals, okay, and this is for equipment rental. Okay, and this time they decide to say, well, at the end of the day, when we build you, we're gonna bill you for the total amount of, let me see, enter in bill. Hold on, sorry. We're gonna enter in the bill for Rodriguez for a total of $185. Okay, so here's the reference number. They decided to they gave us a reference number of 1352. Obviously, and then it's going to be for the total amount of $185. Okay, for renting the equipment. Okay, for the Walnut Creek location. Okay, and I'm gonna go ahead and save. Now, because they billed me $185, right? That means I'm gonna get a refund from Rodriguez because I end up giving them a deposit of $200. That means I should be getting $15 back. So in this case, this is also another lesson where it's saying, well, that means you're gonna get a vendor refund. So how do I get a refund for that? Well, Rodriguez is going to send me a check. Okay? So in this case, what I'm gonna do is I'm gonna go to record deposits. Okay? Because they're saying, well, I wrote you a check for $200, you billed me for $185, so therefore you owe me money. And they sent me a check including the bill. So in this case, who did I receive this from? You received this from Rodriguez. Okay? Okay, Rodriguez Rentals, okay? And what account does this affect? This is account, it affects the accounts payable account. And what was the memo? Refund on deposit, okay? And then again, what was the form of payment? It was a form of a check, so they sent me not cash. They sent me a check, and it was check number. So my refund was issued a check for $15, check number 423. All right, and class Walnut Creek, once again, because this is rental equipment for Walnut Creek, and they issued me back $15. Okay, and I'm going to go ahead and save this deposit. Now I need to get rid of my accounts payable because at the end of the day, I already made the deposit. I already, and I received the bill. So right now, it says that I'm still outstanding $185. So how do I get rid of that and apply this deposit on there? Well, same thing here, right? Because I entered in a bill, I created an accounts payable. So I need to go to my pay bills to go ahead and undo that. So here I have, what you notice here is that I have a couple bills here. Okay, first one, Rodriguez for $185. You're gonna select this, okay? And then you're also gonna select that $15 because that was supposed to go against it, okay? Or in this case, I'm gonna leave it there. So it says right here, I have 1 credit. So if I have 1 credit, I'm going to go ahead and set that credit. So it says here that I paid $200. The bill was only $185, so I should be getting a $15 credit back. And that's correct. And I'm going to go ahead and click done. So what you're going to notice here is, boom, Now that $185, right, has been cleared off, and it cleared out this right here. All right, so that means when I make a payment, I don't owe anything because of this right here. Now this $15, right, this is the money that you got back. So in this case, when you deposited the money, it's going to clear this as well. Because in this case, you don't owe it, right? This was money that the Rodriguez gave you back. Okay. So that's how I'm going to do that. Now I have a credit for 15, so then I could go ahead and we could clear that off as well then. Okay, so and then clear off this credit here. Okay, for $15. There you go. So then now you owe absolutely nothing because you cleared off both credits. You already redeemed your $15 back. Your total amount was supposed to be for $200, but you end up paying the bill for $185 and you receive your $15 payment back. All right? And that's, you save and close, and then that's how you apply your vendor deposit for that. Okay? Any questions in regards to that section right there?
Nope.
Okay. All right. So next section is going to be in your book is going to be paying your sales tax. In this case, I'm just going to save sales tax all into one area, and that area is going to be in chapter 3. So that's next week. But what I do want you to know is, so we're going to skip over sales tax because I'm going to show you how to create your sales tax, how to collect it, and how to pay it all in one sitting. So we'll talk about sales tax later. Okay? And we already talked about the bill tracker. So the most important thing that I do want to go over is going to be how to manage your loans, because in this case, this is going to be very, very typical of any kind of business is you're going to have a loan, okay? Because you're going to have a business loan, you're going to have a personal loan, you're going to have a, maybe you took a loan to, keep your business afloat. I don't know, but you're going to have a loan. You're going to have a truck loan, a car payment loan, right? Because you need a vehicle to be able to use for your business. For whatever means that you have this loan for, this is the best way. And this is a new feature in regards to, not a new feature, but this one is a feature that is only available for Premier. Okay? If you have Pro, you cannot do this. Okay? It's only for Premier and above. So in this case, right, let's take a look at this loan manager, right? How do we actually enter in the loan? Before even starting, right, you need to enter in your loan in your chart of accounts, and you need to put in the amount that you owe. What this loan manager does is it just helps you process the interest, and it also helps you make your payments on time and so on and so forth. But it doesn't actually enter the loan in. You're going to have to enter that in manually. And in this case, in this QuickBooks file, it's already been done for us. All we have to do is manage how the loan is going to be charging us tax, how many payments we make on it, and so on and so forth. So when we go ahead and already enter in our loan already into the QuickBooks, now we go ahead and we enter in, or how do we manage our loan. So your only way to be able to do that is going to be through the banking menu. Nowhere else. Not on your home page, not on your vendor center, nowhere else except for Loans Manager, right? Because this one is very specific. Because again, are you always going to have a loan? It just depends on your company, because it just depends whether you took one or not. So in this case, Loan Manager is only going to be available in the banking menu, and here it is, Loan Manager. Okay? You click on it, you're going to get this window. Okay? Now it's saying, well, you don't have any loans right now. So now you need to set it up. In this case, remember, you already entered it into QuickBooks already, as in you already created that, right? When you took the loan in the first place. Now this is so that you can go ahead and manage it, pay it, record the interest on it. Okay? So in this case, right here, first thing at the top of this window is to add, because I have nothing in here. So I'm going to add in my loan. So now you're going to be entering details in regards to the details on your loan. So again, on that page right there, you have that little chart, and you're going to fill in the details about this loan. So first thing I have here is going to be, you're going to enter that this is a truck loan. Okay, so what is the account name? You should have already entered it in here. It should be a truck loan. Okay, so again, this is what you have to already, this is from your chart of accounts, what you have available. So in this case, this is something that, again, it has to be entered into your chart of accounts beforehand. So again, I'm going to select truck loan. All right, now, who is the lender? The lender is going to be National Bank, I believe. Let's see. My truck loan is from National Bank. So in this case, I'm just going to type in National, so N. Okay, it won't let me enter in National, so I'm just going to select it, National Bank. Okay. And it says, okay, so what was the origination date? In this case, when did you actually assume or acquired this loan? In this case, I acquired it. In this one, you actually have to go back and type and click on it. It won't let you select. It won't let you type it in. So I got it on the 31st of December of 2020. All right. And how much was the amount for? It was for $24,000. Okay. And how many payments is this going to be for? You have a total of 60 months or 60 payments. Okay, so in this case, terms is 60 months, right? And you can choose how you want to do it, per year, per week, or month. In this case, I have 60 months to pay this off. All right? Click next. Now the next section says, when is the due date of the next payment? Well, when is it due? It is going to be due every 31st. So in this case, the next one that is due is going to be January 31st of 2021. So you're already creating, say, the next one is going to be due at the at the end of the month. Okay, so then now you're going to be plugging in information such as how much is this, okay? What is the total amount of payment? In this case, this is the number that the car dealership already administered to you, right? But when you walk away, that's the agreement terms that you're going to pay. You're going to pay $452.16, okay? And what is it going to be charged at? Again, interest, or in this case, it's going to be every month, right? You're going to get this bill every single month. Now the next section says, does this loan have any escrow or anything like that? So and then in this case, if it's a house loan, you have to pay additional fees on top of that. In this case, it's a car loan. You don't need to pay any extra except for, the license fee and all those other fees. It's already included into your total amount of package, which is for whatever you bought your car at. But the loan is completely separate difference. You don't pay for that, right? Or in this case, the loan doesn't include paying off of those extra bills that you have to pay. So in this case, no, it's not included into the loan. Okay? So then now you have right here, alert me 10 days before the payment. So yes, you can actually set reminders on when you have payments due. Okay? And I'm going to go ahead and click next. Now the next section says how much interest are you being charged? In this case, I am being charged at a 5% interest. So in this case, I don't need to put the percentage because it has it right here. Okay, 5%. And when is it compounded? It is going to be compounded monthly. Okay, so you're going to have 5% interest compounded every single month. Okay. And again, the payment account is going to come out of your checking account because that's how you're going to pay. What about your interest? Where's your interest going to be collecting? In this case, you should have already created an account called interest expense. Okay, so interest expense. So here we are, interest expense. Okay. And then last but not least, you have where if you get additional charges or anything like that, what is the account that you're going to get charged? And it's going to be bank service charges. So let's say if I accidentally miss a loan payment, where are you going to get charged that additional money, right? It's going to charge you to your bank services, bank charges. Okay. So now that I set up everything about my loan here, I can go ahead and click finish. So here we go. I have my my loan for $24,000 at a 5% interest, and it says right here that my next bill payment is going to be as of January 31st. Okay, for $452. Okay. So if I were to just go ahead and close this, which I can, right? How do I go ahead and pay my loan? When the time comes, you're just going to go right back into your loan manager, okay? Banking, loan manager. So you get that same window, right? You have your loan there, and now I want to pay my loan. I can choose to do so by either, I can either create one or I can just go ahead and make a payment. So then in this case, I'm going to set it up a payment. Okay? So when you are making a payment, right, you're always going to say refer. Is this a regular payment or is this a second payment? So here's a rule of thumb here. When you are making payments to a loan or to a bank in regards to whatever loan that you do, you're always going to cover the interest first. Whatever money remaining is actually going to go towards your principal. So when you are getting charged interest, every time you make a payment, the minimum payment only covers the interest and a little bit of the actual payment itself. So at the end of the day, that is where most loan sharks and loan companies make their monies, because they're gaining, they got you trapped by saying, hey, go in a contract with me. This is your responsibility. If you want to owe me money, I'll give you the car that you want, but you're going to owe me this much money, and this is how much interest I'm already going to charge on you. So the price point that you get to walk out with already is the price included with the interest already. They already calculate it for you. And all you're doing is you're walking away within the number that you agree to pay on. But in reality, they already charged you the interest. They already charged it and include it into the price that you're making your monthly payments for. So at the end of the day, you agreed to pay 20 something thousand plus an additional X amount of money for you borrowing money from this bank. So in this case, this $452 is going to be a regular payment, especially if you pay for the first time. Now, yes, you can make multiple payments to pay your loan a lot quicker, but make sure if you do choose to do so, you can make the second payment go 100% towards your principal. But that's only if you're making a second payment. If you're only making one payment, you have to pay the interest first, and then your second payment can go straight to your principal. Okay? So that's where they get you, and that's where a lot of banks will not tell you this information because they want you to think that you don't know this unique thing about them, and that they're just going to constantly keep collecting interest from you all the time. Okay, so little fun fact there. So in this case, I'm making a regular payment. Okay, for my truck loan to National Bank, I'm using my checking account. Now, in this case, how much money am I going to be paying? Well, if interest is going to be 5%, which it's already calculated here, meaning that means 100 of the $400 is going to go to interest, and $300 is going to go actually to my actual principal. So this is where you get it, right? You're never going to pay your loan off as quick because you're always going to pay the interest first. Okay. Now, of course, if you do make a second payment, you can choose how much you're going to pay, and you don't need to pay the interest. You can disregard the interest and just pay the principal. Okay. But that's the second one. But for the first one, you are obligated to make the payment to the interest first. So once everything looks good here, you could choose to either write a check or you could choose to enter in the bill. Now, best recommendation is if you're going to make a payment to a loan, do it using the loan manager. It's a lot more easier and a lot more nicer too. Okay, so in this case, I'm going to go ahead and choose and say I'm going to enter this as a bill, and I'm going to click OK. So there you go. I receive a bill. Everything looks good. And let's say the date that I received it was not December or not. Okay, so it's going to be, let's say I received this bill as of January 1st. Since I have 30 days to pay it, right? That means it's going to be due on the 31st. Okay, and you're going to make the payment. And of course, whatever bill number that you received, go ahead and select it. And once again, it's going to pay interest expense $100 and $352 towards your actual principal. So that's how you manage your loans. All right? Any questions?
No.
Okay. All right. So that was chapter 4 for you guys. Any other questions in regards to chapter 4 before we dive into the review questions?
No.
All right. So let's go ahead and do the review questions. Once again, review questions. Okay, select the best answers, okay, for each of the following. So number 1, okay? All right, you may record payments to your vendors by
Can you? Okay, there you go. Will it be D?
it would be D, all of the above. That is correct, right? Because I taught you 3 ways to enter in a way to pay your vendor, right? A says by recording a manual entry directly into their check register, right? That's the very first thing I showed you. Second one was to use a write a checks window or to write a check and print a check without using accounts payable, right? And of course, you can enter in a bill, which again creates an accounts payable, and then use the bill payment to reduce the accounts payable. So in this, yes, D is the correct answer. All right. Those were the 3 ways I taught you how to pay a vendor. Okay. Number 2, okay, to display the vendor center. D, A, B, or C is correct because, again, there are 3 ways that you navigate QuickBooks, and these are all 3 ways, right? You either select vendors on the QuickBooks homepage. B, you're going to select the vendor's icon on the icon bar. And then 3, you're going to select the vendor's menu on and choose vendor center, right? Those are the three ways that you can enter in the vendor center, okay? Number 3, you can add a vendor when.
Is it D?
D, at any time by selecting new vendor in the vendor center. Yes, right? You're not obligated to do in a specific time frame. You don't have to do it anytime because you don't have to have a time frame of when you want to put a vendor in. Okay, because in this case, a vendor can happen at any given moment in time, right? Just like I made that example, right? We went to Bay Office Supplies. We just literally drove down to the store and was like, I need to pick up some supplies. I picked it up from Bay Office Supplies, a vendor I've never used, and I used the quick add to just enter it in right then and there at that moment in time. Okay, so you can add a vendor in any time. Okay. Number 4, which statement is true?
A.
A.
Okay, so let's take a look at A. QuickBooks records each bill payment in a bank account, okay? Register, okay, to a credit card account. Okay, register, example. And then an accounts payable register. So yes, A is in fact true, right? Because that's what it does. It does affect, especially bill payments, affect the accounts payable account, right? So let's take a look at the other answers. B says bill payments increase the balance in both the checking account and the accounts payable account. In this case, does a bill payment increase a checking account?
No.
No, it decreases it because, right, you need to pay in order to pay your bills. So in this case, you will never increase your checking account. So in this case, B is not true. Okay. And it says, see here, you should assign jobs to all discounts taken. No, you don't need to assign any job to discounts because discounts you may not be buying something for a particular individual. You could just be buying it for the sake of your own company, so you don't need to assign a job for it. D says you cannot make partial payments on a bill. Yes, you can. I skipped over that section, but it's straightforward. If you're going to make a partial payment, you're going to notice that on the bill it will say you need to make another payment to complete the whole entire payment. Okay? So again, I didn't go over that, so make sure you do go over that on your own, okay? In the partial payment section. But yes, you can make partial payments. Okay? All right, number 5. Okay? Which QuickBooks features allows you to separate your income and expenses by line of business, department, location, profit centers, or any other meaningful breakdown of your business?
B.
B, class tracking. So good, excellent, right? Class tracking is for making those separations. Job costing is for your customers, right? You assign them to customers. Okay. Number 6, if you void a bill payment, okay, check or all of the following occur except for what?
A.
Let's see. This is number 6. Let's take a look at A. QuickBooks retains a trail of the check number, but the amount becomes 0. Okay, that is true. So the question is, everything happens except. So in this case, yes, that is true, right? When we void a transaction, it leaves the information still there. It just zeroes out the account. But we're looking for the exception. What does not happen?
Oh, so would it be D?
It would be D. Yes. Okay. The accounts payable account decreases. No, it reverts it and it increases it back up again. So in this case, D is the correct answer because we're looking for the exception. Okay, or the except. Okay, what doesn't happen. Number 7, if you want to track the expenses of each customer or job, what do you need to do? Okay, so if you want to track your expenses for each customer or job, what do you do?
Is it D?
Let's take a look at D. Create a separate expense account for each job. In this case, you don't need to create a separate expense account for this.
No.
So in this case, this one is the customer/job section. If you want to assign an expense to a customer, you would do that by linking the expense to the customer/job, okay, if it applies. So letter C would be the answer because on the form, right, you have customer/job, you have the class tracking, and then you have the, yeah, I think those are the two. So in this case, this is for customer jobs, not class. Because class is when you have either a store location or some kind of way to separate your expense. This one is when you're assigning it to people, to customers. Okay. Number 8. Okay. To make a loan payment, you can
All the above?
let's take a look at letter A. Okay, A, select the loan liability account in the chart of accounts and choose make deposit from the activities menu. In this case, that's not the best way to pay off a loan. Just because if you remember, if you're making a loan to a liability, you shouldn't be using the chart of accounts necessarily, even though that is you're going to be entering in the register. But in this case, is there an option to make a deposit at all when you go into there?
That's why I was a little confused about choosing all of the above because of that part of it, the making a deposit from the activities menu.
Okay, so in this case, making a deposit does not pay a liability. Making a deposit in our sense is making a deposit to our bank account. So in this case, A is definitely not the answer here. Okay, let's see B. B, choose pay loan from the banking menu. Is there a pay loan in the banking menu? Let's take a look. Banking menu. Is there pay loans?
No.
No. So in this case, B is not the correct answer. So let's see what the next one is. C says, using the loan manager, okay, to calculate the interest and then principal accounts, and then select the loan manager, and then select loan to pay, or in this case, it says set a payment, okay, and then it choose set up payment. So there you go. Okay, so letter C is correct. That's the only way that you're able to access the loan manager, right? And that's the only way that you should be able to use to pay your loans. Okay, that's the best recommended way to do it. But the other two, no, they don't exist. Number 9, okay? When a vendor credits you your account, okay, and you record it in what? Okay, so when you request a vendor to credit you, all right, where do you enter in that vendor credit?
D.
The accounts payable register. Okay, no. You wouldn't be able to do that. That's for in kit. You shouldn't do that. That's not the best recommendation for that, because then it's, if you're going to put in the accounts payable register, you're not going to be able to differentiate why. Like, yeah, you can say who, and you can say, oh, I got money back, but at the end of the day, that's not the right, that's not the correct way to do it.
My answer is B.
B, you're gonna enter the vendor credit by using the enter bills window. So if you remember from the lesson, right, we entered in Nellis as a bill, and then when we received the bill credit, we record it by using the enter bills window, and we select credit. Okay. All right, number 10. All right. Which account type should you use to track petty cash?
My answer is D.
D, checking. Is a petty cash your checking account?
I don't think so.
No.
No. Is a petty cash a credit card account?
No.
Is petty cash equity?
No.
No, right? It's how can a petty cash be determining the value of your company? No. So in this case, there is no such thing as a checking sub-type account. So in this case, we only have, let's take a look at our chart of accounts. We only have,
You said credit card, didn't you? Oh, you could use a credit card?
for a petty cash,
I thought that's something that you said. That when we use a petty cash, it's either for like a small amount of money.
if you choose to not have a petty cash drawer and in place of it use a business credit card, then that petty cash doesn't exist because it just becomes a business credit card.
Oh, okay.
So yeah, that's what I said earlier today was if you do not choose to have a petty cash drawer, because again, why have a lockbox full of cash in your store? Just randomly. Anybody can go and steal that, right? But a credit card could be put away in a lockbox as well and could be stored, and only certain people can sign off for it, right? Not everybody can say, I can just use my business credit card whenever I like. No, you have to have co-signers or, give people permission to sign them. But in this case, yes. In this case, if you don't have a petty cash drawer, you can replace it with a business credit card. It isn't a petty cash isn't a credit card. Okay, so in this case, if you take a look at my chart of accounts, I don't have a checking sub type account. I only have bank. Okay.
Bank.
So in this case, the answer is bank. Right.
Bank. Okay.
All right. Number 11. Okay, the vendor balance detail reports. Okay. So let's talk about this real quick while we still have a couple more minutes left in class. So in this case, right, I've mentioned to you that every single chapter, you're going to get a section full of reports. Reports are only going to be relevant to you in depending on what position you have in the company. So again, if it matters to you, if you are the person who's in charge of dealing with bills or just paying people, you're the accounts payable manager, then that means this reports is going to be for you. But again, every single chapter is going to talk about a specific topic. Every chapter is going to have a topic based on these criterias, right? These are the positions that you can have. But if you're not going to be in charge of handling bills and that has nothing to do with you, then these reports are going to be meaningless to you. Because why do you need to run yourself a accounts payable or a vendor balance detail report if you're just in charge of sales, right? If you're charged in sales, you should be responsible for your own section, which is going to be dealing with customers. So in this case, it really depends on the position that you are in. Now, again, every chapter is going to give you a brief description of what not every single one, but typical reports that can be done. So in this case, we have the accounts payable / vendors. So payable and vendors. These are what you can create reports on. Okay. So again, you can create vendor balance information. Okay. So again, the vendor balance detail just gives you literally a list of all your vendors and how much money you owe each and every single one of them. The detailed report's going to break it down to saying, well, which bill are you specifically responsible for each person? All right. So each report is going to be significant to the position that you're in. So again, this may not be relevant for you if you're not in the position of the accounts payable. So I will go over maybe a few reports, but not every single one of them, because again, if you're not even in that position, why does it matter for you to run these reports? Okay, so that's that. But in this case, this came from your reading. Okay, so what does the vendor balance detail report do? What does the vendor balance detail report do?
A.
Let's,
Yes.
11 is A, yes, right? It shows you the details of each bill and bill credit and so on and so forth that you have for each vendor. Yes, I just said that already, okay? So that's what the vendor balance detail report says. Question number 12, okay? What is the accounting behind the scenes for a bill to pay your bills window? So, what do you think happens behind the scenes by using the debit and credit system? How does the accounting behind the scenes work for paying bills?
B. B.
B, okay? So, let's see, take a look at B. B says you're going to be decreasing a debit account payable, right? Because we're paying a bill off. You're decreasing accounts payable, meaning you're lowering your liabilities, right? And because the way that you lower a liability, you would be debiting these account, okay? And it says right here, you're going to be decreasing credit to a checking account, right? Because in this case, checking account, right? We're making a payment. We're losing money. We're spending our money. So in order to decrease an asset, we have to use a credit. So in this case, B is the correct answer. Okay? Number 13, okay? It's best not to use which field in the new vendor setup window. Okay?
A.
A, the opening balance. Correct. Okay? Like I mentioned this before, never ever use the opening balance for any account, okay? You only do that by putting it in using a general journal, okay? But especially when we're looking at vendors, customers, whatever it is, right? Never put an opening balance because it doesn't determine. It just says that you owe this person money, but it doesn't determine how many bills you owe this person, right? How many of them are credits? How many of them are refunds and returns? Right? It just gives you a balance. So in this case, best recommendation to get that account balance to be matching your opening balance is to manually retroactively enter in all those bills. Okay. Number 14, in the pay bills window, you can sort the bills by
All of the above.
all of the above. Yes. So if you remember when I opened up the bills payment, you could do it by due date. You could do it by vendor, and you can also even do it by discount date, right? Those are parameters and filters that you can do at the very top of the window to see what bills you want to look at and want to pay. So D, all of the above is correct. Last but not least, number 15, which statement is true in regards to bill payments?
Is it D?
I was thinking C.
Okay, we got one for C, one for D. Anybody else?
I just remember going back, and with D, we have to put a C next to it and still go back and do some kind of a transaction with it. So it wasn't really automatic. That's why I was a little confused on the D part.
All right, so remember, we're looking for the statement that is true in bill payment. So let's go ahead and look at all the answers, okay? But we'll go backwards, okay? So you said D. D says bill credits that are created from a vendor are automatically applied to bills that are due. Now, is this true? Is it automatically?
I don't think so.
It's not. We have to manually do it ourselves. We have to be responsible to remember there is a credit, and we have to apply it ourselves by selecting one of the two options, right? So if you remember, down here, if we go to bill payments, we have to memorize or remember whether we have a credit or not. And that's going to be either we do the discount here or we do the credit here. So we're talking about credits, right? We have to apply that credit. It doesn't automatically do it by itself. So in this case, that's the only part that's not true, is automatic. Okay. So let's take a look at C. If you select more than one bill for the same vendor, okay, QuickBooks creates a separate bill payment for each bill. Okay, so in this case, let's take a look. So in this case, no, it does not create a separate bill payment, right? Because in this case, yes, you can select multiple bills and paying it off with one check. Is it necessary to create separate bill payments for that? No, because at the end of the day, you're paying off one vendor and you're paying off the total amount that you owe them. So in this case, it does not create a separate bill payment for each bill, right? It's just going to lump them all into one, but it's going to recognize that, yes, you paid for this bill and you paid for that, right? It's the same thing as doing the split payment, right? You can pay for a lump sum, but you can also go in there and say, I paid for this and I paid for that for this store and for that store. That's the same idea here, where if you're going to pay multiple bills to one vendor, yes, it's all going to be recorded as a lump sum, but if you go into detail, it will show that you paid two separate bills. Okay? All right, B says when you pay bills by issuing a check using the pay bills window, QuickBooks records each bill payment in the checking account register and then in the accounts payable account. So I did show you this, right? I showed you that for every bill payment, it's going to show up in your checking account, right? It's going to show up as a bill payment. Okay? It's going to tell you that you paid off a bill. And of course, because by doing so, right, it will affect your actual accounts payable account. Because look, remember I showed you the accounts payable. Right now, you owe this much money, but if I actually double click on it, it affects my accounts payable because look, I paid with the check here. I have a bill payment right here. Okay? It paid it off and credited my accounts payable. So in this case, letter B is actually true. Okay? And let's take a look at A. A, bill payments increase the balance in the accounts payable account. Bill payments. We're paying off our liabilities. So in this case, it will never increase the accounts payable. It will only decrease the accounts payable. So in this case, the true answer is B. Okay. All right. So we are ending the class now. So we went a little over time, but that's okay. Just a little announcement for you guys here.